capacity continues to leave the market while costs, of course, remain high. How is this affecting freight availability, rate swings, and operational decision making when it comes to carriers and, I mean, brokers as well?
Yeah, that's been one of the that's been one of the biggest challenges, I think, as we look through this and kind of this prolonged kind of part of the cycle and even into a trough or just a flattish environment over the last couple of quarters. And we measure the curve again from a line haul perspective and a year over year look, but we also try and look at what's happening to all in rates in the environment and how that is playing out sequentially and over time. So part of our curve publication, if you look at it, and yeah, this chart on the screen, I really like this chart. What we do is on the black line, we're measuring and we index all in freight rates back to 2015. There's no really significant level to 2015. It's just kind of the middle of the chart. But what this is telling us is this is a measure, if the 2015 average is the 100 level, where we're sitting today and where we close Q3 is that all in transactional buys in the market are only up about 16%. So when you see 116.3 there, it's about 16.3% compared to 10 years ago. And everything we know about the operating cost for the average carrier in the market over that time period, from our indications, is that those costs are up about 35%. So there is this big delta around the pressure that the capacity is feeling, and that's how we've seen, and one of the biggest reasons that we've seen continued exits over this period. And until that changes, I think we're going to continue to see those exits, unfortunately, because the economics just aren't there. The operating costs are continuing to rise, and we think about maybe insurance premiums into 2026. Yeah. They're going up, and it's going to be continued pressure for the operating costs on the capacity side. It's been a big driver of why this thing is kind of playing out the way that it is.